Good morning, and welcome to the Leap Podcast, your concise, level-headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Friday, 27th of March, 2026. The market is showing sustained weakness after trading lower. Broader geopolitical tensions and energy market disruptions are introducing fresh layers of macro uncertainty that continue to weigh on risk sentiments. Let's leap in. The total crypto market cap stands at $2.36 trillion US, reflecting only modest weekly gains across the board as the market continues to show limited directional conviction. Bitcoin, Ethereum, and Solana have edged lower today, with institutional activity clashing against short-term technical vulnerabilities and external macro pressures. Bitcoin is trading around $69,111, up about 2% in recent sessions, but still sitting lower on the week. US spot Bitcoin ETFs recorded strong net inflows this week, exceeding 1.2 billion. MicroStrategy continued its aggressive accumulation, now holding roughly 3.6% of total supply. Key negative catalysts persist. On-chain buy-side momentum has weakened, with only 57% of BTC supply currently in profit and realized profits down sharply since early February. This suggests that while institutions continue to accumulate, broader market participation remains tempered amid external pressures. Ethereum sits at $2,074, up roughly 3.4% today, but with limited weekly progress. Developments include Bitmine adding 101,000 ETH worth 219 million. However, persistent sell pressure from miners and ETH vehicles continue, with ETH ETFs recording outflows for 6 consecutive days, totaling 125 million on the week. This divergence highlights short-term profit-taking, even as long-term holders appear to maintain exposure. Solana is trading at $86.79, up 2.6% today. Spot Sol ETFs have now surpassed 1 billion in assets under management with consistent inflows. While the ecosystem continues to expand rapidly, tokenizing over 200 US stocks and ETFs, yet the market has continued to punish Sol in recent sessions. This creates a potential reflexivity reversal setup if capital momentum catches up, but near-term price action remains vulnerable to broader macro volatility. This week's escalation in the Iran-US conflict has added significant geopolitical overlay to risk assets, now in its fourth week. The conflict has been continued strikes, Iranian missile waves targeting Israel, and disruptions in the Strait of Hormuz, including reported mining activities and selective vessel fees. Diplomatic efforts remain fluid. The Trump administration has proposed a 15-point ceasefire plan and extended a pause on strikes targeting Iranian energy infrastructure to the 6th of April. Markets are closely watching any progress towards de-escalation, as prolonged volatility in the critical choke point amplifies global energy risk. Gold has performed as a classic safe haven amid these tensions, though it has pulled back from earlier 2026 highs, trading recently in the 4,400 to 4,560 US dollars per ounce. The metal has shown resilience, but also some profit-taking as diplomatic signals emerge. Bitcoin's correlation with gold remains a notable observation point for investors navigating this hard money environment. Closer to home in Australia, the fuel crisis triggered by disruptions in the Middle East has intensified, with limited domestic stockpiles and heavy reliance on imports. Petrol and diesel prices all surged. regular unleaded jumping towards $2.50 per litre in major centres, with some regional stations rationing or running dry. The government has lowered fuel standards temporarily and released reserves to ease pressure, but cascading effects are hitting logistics, agriculture, and consumer confidence. This adds another layer of macro headwinds for risk assets as higher energy costs feed into inflation and slower economic activity. Institutional infrastructure build-out continues to dominate longer-term crypto sentiment despite these near-term shocks. Bitcoin-backed mortgage concepts through Coinbase and others signal mainstream collateral acceptance in the $12 trillion US mortgage market. This marks a shift in how crypto is being referenced, from purely speculative assets towards productive capital. If crypto were to be used in mortgage structures without triggering liquidation risk, it may represent an alternative approach to how digital assets are utilized within financial systems. In summary, the market tone remains fearful, with only modest recovery attempts so far, but markets can pivot rapidly on fresh inflows or diplomatic breakthroughs. Remain calm, stay informed. This concludes your market update for the 27th of March 2026. See YouTube and Spotify links for more information. Thank you for listening to the Leap Podcast.